Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and finance. This week, the emerging market rout. Who's to blame? Is it the rich world's monetary policy, or should we look to more deep-seated problems, masked for years by stellar economic growth? Also this week, from Nigeria to the world, we look at the country's ambitions to become the aviation hub of Africa. And you probably won't be surprised as to just who's financing that growth. Plus, the next war, it won't be over oil, but it could be over water. We look at the warnings and the hotspots. So this week we're building on something we started a few weeks ago, that is the current economic troubles in emerging markets. Now, when we looked at this back in August, the headline was pretty simple. The blame for the slumping currencies from Brazil to Indonesia was being put firmly at the door of the United States Federal Reserve. In short, it's planning to wind down its huge stimulus program, which, if you remember, favoured those emerging markets where interest rates and returns remained higher. So the talk of all that reversing wasn't received very well. Brazil's finance minister, for example, Guido Mantega, said this: "Now we are facing new turbulence in the financial markets caused by the Fed, which has caused serious problems not only in Brazil but around the world." He believes the Fed went over the top in its dose of monetary stimulus, and now it is in the process of deactivating it. But this must be done with a lot of care so as not to damage other countries. But then there's those who would defend the might of what's called the rich world's monetary policy. And actually, we're looking at their side of the story this week. Those who suggest money pouring in and out of emerging markets hasn't been well used and has just actually masked some deep-seated issues. And you know, they might have a point. Take India, which has welcomed a new governor of its central bank. Its insatiable appetite for gold and oil means it's running a current account deficit. Now, subsidies and welfare programs have increased its budget deficit, and with rampant inflation and corruption, the central bank's Raghuram Rajan has a lot of work to do. And here's another part of the problem that's not limited to India. According to Bloomberg, emerging markets, excluding China, have more than $2.8 trillion of currency reserves. But they seem to be saving that money and using interest rates to stop the outflow of money, which is not having the desired effect of slowing a rout in currencies. However, at the G20 in St. Petersburg, BRICS nations did pledge to create a $100 billion pool of currency reserves to protect themselves from any shocks. Despite the pledge, China and Russia said nations needed to look within to rebalance their economies, which rules out any bailouts. So to our case study this week, Indonesia. You know, a year ago, its economy was doing really well, but now the currency's plunged, growth is slowing, inflation's increasing rapidly. Not surprisingly, there are calls for some quick action to fix one of the important economies in Asia. Step Valson has more now from Jakarta.
1 year ago, her future looked bright, and Liu opened a kebab cafe, hoping to profit from the economic boom, which then seemed endless. Now things have changed, with prices going up and growth slowing to below 6% this year.
When we opened this cafe, we thought we could take advantage of the economic growth back then, but now we suddenly have to face this awful situation. Of course we panicked. I wonder if we can actually continue our business.
In an attempt to improve the situation, the government announced new economic measures on Friday, including the easing of regulations and tax deductions in the hope of trying to restore investors' confidence.
This means companies can maintain their profits and don't need to lay off workers. We are asking them not to do that. If there are no job losses, domestic purchasing power can be sustained.
Many Indonesians still clearly remember the Asian financial crisis of 16 years ago, when the local currency, the rupiah, dropped by 80% and many companies went bankrupt. Many things have changed since then, but some have not. The infrastructure is aging, corruption is still rampant, and the bureaucracy is hampering investment. According to economists, in order to prevent a new crisis, these fundamentals need to be addressed.
I think the policy package of the government is good in a way that it will help boost exports and it will also help generate more employment, but that would be in the long run.
In the short term, the government needs to urgently stop the decline of the rupiah, which has fallen to a 4-year low. It also needs to reduce its account deficit of $9.8 billion. Back at the kebab cafe, Anne Liu says these figures don't mean much. She only hopes that food prices go down quickly.
So this week it's about looking within, looking at these emerging economies for both the problems and the solutions rather than looking further afield. And we're going to do that now with Jorgen Elmeskov. He is the Deputy Chief Economist at the OECD, joining us from Paris, and we thank you for your time. The short story is that falling currencies are in part due to the United States easing off on quantitative easing. We talked about this a couple of weeks ago. I want to get from you the bigger long-term structural issues for these countries, which also mean that their currencies are heading south.
Well, I think it's true that the discussion about US tapering of QE has been the trigger for many of the moves we've seen in currencies. But I think there are some underlying economic developments that lie behind this. Growth has been slowing in a number of emerging economies, and at the same time, the signs have increased that there's a recovery in the advanced economies. So I think that's lying behind. At the same time, some emerging economies with substantial current account deficits have relied on short-term capital inflows of a debt or portfolio nature to finance the current account deficits. And they are the ones who have now seen the greatest pressure on their exchange rates.
But if you're a country like India or Indonesia, to use a couple of examples, and you've had all this Western capital flooding into your markets all this time, forgive me oversimplifying, but shouldn't you have done something with all that cash, turned it into something tangible so it wasn't just sitting there in an investment account ready to be removed basically whenever the investor wanted to take it out of the country?
I think that is a good point, and indeed I think in many countries capital inflows have been put to good use, financing investment that has increased productive capacity going forward. But it has also been the case that in some countries capital has gone into investments that have not been particularly productive, and of course now that the capital flows out again, that leaves the countries in question with a headache. So really, what you need to have is you need to have some structural policies that ensure that when capital flows in, it goes to the right places. It doesn't just finance a consumption boom, but it does lead to some productive capital investment.
And what about, Jorgen, some responsibility as well? You think about the BRICS nations, which are collectively sitting on about, close to $3 trillion really in currency reserves. And they're not doing much with it. That could be put to use, take some of the dependency off the Western capital markets.
Well, I think one has to be aware that it's always the case that changes in monetary policy in one region will have implications for the other region, and I think in general it's not a particularly good idea to try to resist the associated movements in exchange rates. So I think that's the situation also for emerging economies now. They should not resist the general repricing of financial assets, including their currencies, that follow from the prospective change in advanced economies' monetary policy. That doesn't mean that they cannot use exchange reserves to perhaps smooth the developments in currency markets, but trying to defend something which is not really well aligned doesn't make for good policy.
In the end, Jorgen, maybe this is, and I might just be starting to get a little philosophical here, so stay with me on this one. But are we perhaps seeing a major flaw in globalization? We talk about the supposed benefits for everyone, but actually it can end up being a pretty one-sided equation if we're not careful.
I think not. I think globalization has actually been a major boon to both advanced economies and to emerging economies. And if you look at the developments in growth in the respective regions, and we have looked a lot at that in the OECD, you tend to find that, yes, indeed, globalization is good for growth. That doesn't mean that there are not some problems that come with it, and clearly there have been some issues about instability created by globalization, and clearly there is a need for institutions to realize that they work in a new and more globalized world economy, and that means that things are not the way they were in the past. It may be necessary to change some policies because the world has become more globalized, but at the end of the day, I think this is a good thing.
That is Jürgen Elmskov, the Deputy Economist at the OECD. We thank you very much for your time today. And still ahead on Counting the Cost, the currency that's actually showing some resilience despite civil war and no central bank. We'll tell you where that is a little later on. If you were to think of aviation hubs, you'd probably come up with London's Heathrow for Europe, perhaps Changi Airport in Singapore, Dubai in the Middle East. Where would you think of for Africa, though? Well, how about Nigeria? More than 10 million people travel through its 22 airports every year. And the Chinese have now given Nigeria a huge loan to build new international terminals and to assist with training and investment in virtually every area of the aviation sector. Yvonne Ndege has this story for us from Lagos.
So action for rejection of the yours.
We're about to take off on Arik Air from Nigeria's capital, Abuja, to the commercial hub, Lagos. This is one of around 500 flights that will fly through Nigeria's skies daily. But there are not enough pilots, flights or general aviation services to meet the demand for air travel in Africa's most populous nation. Planes are nearly always full, with more than 10 million people flying through the country's 22 airports each year. That number is set to increase to 50 million over the next decade. So there's a race to increase capacity and improve services across the board. It's being led by Nigeria's aviation minister.
Essentially what we want to accomplish at the end of the day is to have Nigeria become the natural hub for the region and then extend it for the continent because we want to leverage on the population that we have.
Here in Lagos, these Nigerian air traffic controllers are benefiting from a plan to train nationals for aviation jobs. The country's airports are being given a multi-million-dollar facelift, and China has invested $500 million to build more international terminals.
I'm trying to make it impossible for you to remember that there used to be a country called Nigeria where you have electricity filtering, you have conveyor belts that don't work, that toilets, you will be afraid to step into toilets. All these are things of the past.
We asked passengers arriving in Lagos from Paris about their experience.
Very fantastic, and in fact I had some foreigners when we landed and they were marveled that this could happen in Nigeria.
But some air travelers passing through Nigeria's 22 airports say they're yet to feel the changes and improvements being made in the aviation sector.
It's been a little bit chaotic. I think if there had been a little bit more organization in terms of where departures, arrivals, in terms of custom checks and so forth.
And there are other problems like frequent delays and flight cancellations. A new passenger's Bill of Rights will now penalise airlines for this. Analysts say previous governments have not been committed to improving the aviation sector. But this administration is investing heavily in infrastructure and training to get its ambitious ideas off the ground.
Now, the author Mark Twain once remarked that whiskey is for drinking, water is for fighting over. And a series of reports from intelligence agencies and research groups indicate the prospect of a water war is becoming increasingly likely. It's not difficult to see why either. 97% of the water on our planet is salty. The remaining 3% is the clean drinking water. And a UN report predicts 30 countries will have water shortages by 2025. 18 of those would be in the Middle East and North Africa. For example, the world's longest river, the Nile, it flows through 11 African countries, which has prompted all sorts of battles for control. Ethiopia started building a hydroelectric dam which would divert the Nile, sparking concern in Egypt and Sudan. Israel, Jordan, the occupied Palestinian territories, they depend on the River Jordan, but Israel controls it, and diverting the river was one of the causes of the 1967 Arab-Israeli War. Turkey and Syria were in dispute in 1998 over the Euphrates River. It crosses an already volatile region, Turkey, Syria and Iraq. Now Turkey is diverting the river to build a giant dam. And India and Pakistan are in disagreement over the water that flows from Indian-administered Kashmir into Pakistan's Indus River basin. One of the reasons we're talking about this is because it is World Water Week, and we've got Anders Jokersug joining us from the forum in Stockholm. He is with the Stockholm International Water Institute. And I guess, Anders, this is something that we and a lot of our viewers can simply turn on a tap and not worry about a lack of water. It's just there. This makes it a potential problem and conflict that can go unnoticed.
Yeah, that's correct. Most of us can just turn on the tap and we have flowing water. But in many parts of the world, that's not the case. We in the world face a global water scarcity actually coming at us due to population growth and the competing demands from development and so forth, which puts additional pressure, not least in Africa, but also in the Middle East and North Africa region.
So it's really got the potential to be a source of conflict, hasn't it? You know, on our show last week, we were talking about oil and how easily that becomes part of a conflict, particularly in this part of the world. Do you foresee a time, even in the near future, where water could be a serious source of conflict?
Yes, water is a source of conflict, but often it has proven not to be a source of violent conflict, but rather, and this is perhaps counterintuitive, it's been a source of cooperation for countries that, for example, share a river, a lake, or a groundwater aquifer. More often than not, the countries have come together, actually cooperating, at least to some extent, over that resource. One case in point is the Israeli-Palestinian case, where, in spite of all the problems and conflicts between the parties on the political level, they maintained a basic cooperation over water resources. However, not of course always on equal basis, but at least there is some type of coordination. Another case in point is India and Pakistan, who has maintained, in spite of fighting 3 wars, they've been continuing to coordinate and cooperate over the sharing of the Indus River.
So what you've given me there, we could say, are even some of the established battlegrounds, you know, India, Pakistan, Israel, Palestine. Where else would you say should we be looking for potential water hotspots?
Yeah, in Africa there are other examples, such as the Nile. We see political tension there around the Nile River, coupled with all the other tension that's going on in that region. We also see example of need for more cooperation. I would say in the Mekong, in the Central Asian region, where the water sharing is an issue of at least political conflict at this stage. So those are some of the regions we need to engage in and find cooperative solutions. And in order to sustain those, we need to support the countries that are sharing those rivers and lakes.
What about any problems in the developed world? Because most of the examples you've given me there have been in the emerging and developing countries.
Right, there are challenges also in the developed world, but in many parts of the developed world we don't face a similar water scarcity as compared to large parts of the developing world. And because of that, we're not as dependent on those water resources. We do have, in many cases, more water than needed for our own consumption in the particular countries. But one case would be the US, for example, which share waters with Mexico, and the dry ports, and we see dry spells coming to the US every now and then, and in that sense the cooperation and sharing of water between US and their neighbors, Mexico in south and Canada in north, could be a source of tension at least, but it has been overcome in peaceful and very cooperative way so far.
So you have an event like World Water Week, which will bring about awareness, and that's obviously a good thing. But I wonder, is there I don't know about governing body, but is there a group or a body which can oversee these things and try to help with mediation and resolving any sorts of, any future even potential water conflicts?
Well, there is scope for third parties to engage on transboundary waters or water that's being shared. The key question in this regard, as we see it, is that it is something that's being asked for by all parties. Third parties can then usefully engage, and that is primarily being done through the UN system, but also through EU, and also sometimes from interested countries in a particular region that may have a stature of being able to engage. We know that the former South African president, Thabo Mbeki, is engaging in the sharing of natural resources and the peace deal between Sudan and South Sudan. And that is an example of a regional mediator and how he, in that case, can contribute to the sharing of water and resources.
That is Anders Jakobskog joining us from World Water Week in Stockholm. Thank you, Anders. Finally this week, some good news about currencies, and we've gone to Somalia to find it. You'd think after 2 decades of civil war that people would revert to bartering or using the dollar. But not so. Even without an actual central bank, the Somali shilling has survived. Mohammed Ado has this from Mogadishu.
This is Somalia's central bank, or what is left of it. Ripped apart by the long civil war, it's now slowly being brought back. When the conflict began in 1991, the doors of the bank were blown apart. Its safes were blasted and all the cash and valuables looted. But something odd happened. The Somali shilling banknotes continued to circulate. And this is Mogadishu's Bakara market, Somalia's unofficial central bank for the past 22 years. It's here that the rate of the shilling against the US dollar is set.
Everything is dictated by the supply of dollars in the market. If there are a lot of dollars, we lower the rate of the shilling and vice versa.
The inflow of dollars, mainly through remittances, contributed to the survival of the Somali shilling. The dollar is also used as a backup currency, but mainly for large transactions. The traders at Bakara have devised their own ways of finding counterfeit bills from bundles of Somali shilling notes.
It's easy to tell between a fake note and an original one. The feel, the quality and the texture are not the same.
The truth is almost all of the Somali shilling in circulation are counterfeit. After the collapse of the Somali state, rival warlords and businessmen printed their own money. But the lack of a central bank to regulate currency supply has given the pre-war shilling a certain prestige. Even the forgeries do it the honor of declaring they were printed before 1990. Inside one of the vaults of the National Central Bank, a worker stores Somali shillings. Every bundle here is 1 million shillings, or about $50 US. Old banknotes are now convertible into deposits held at the bank. But the bank has no immediate plans for issuing a new Somali currency.
We're in a post-conflict country where there's a lot of vulnerable people, the families. If you do it wrong, you're going to have serious implications to a lot of families who are living on less than $2 a day or so forth.
Having survived against great odds, the shilling now faces another serious challenge in the form of dollars transferred by mobile phone. ZAD, a mobile money service that allows users to pay for goods by texting small amounts of money to a merchant's account, is proving popular in the capital Mogadishu. But the shilling cannot be counted out just yet. If it can survive without a government, it can probably brush off modern technology too.
And that there is our show for this week, but there's more for you online at aljazeera.com/business. The latest business headlines are there, as well as all of our previous episodes for you to catch up on. And then to get in touch, you can tweet either me at Kamal AJE, our business editor at Abid Oliver Ali, or drop us an email. countingthecost@aljazeera.net is the address. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.